Hello everyone, welcome back to another video of Financial Impulse. In this video, we will discuss about bullish engulfing candlestick pattern. So people who belong to the world of trading and investing obviously know what bullish engulfing candlestick pattern is. But what most people do not know is how to use it to spot the change of trend. So this candlestick pattern is very important and appears at the beginning of an uptrend in most of the cases. Okay, so in this video I will show you with live examples on chart how you can easily spot bullish engulfing candlestick patterns, which earlier we used to spot it manually, but these days there are tools available. I will show you how you can use it, and also I will give you a technique which you can use it to spot the trend of change, and you can take investment and trading decisions without any second thought as soon as the rules which I tell you are fulfilled. Okay, so this video is going to be very interesting and important for your trading and investment journey. Please make sure to watch the video till the end. So let's get started. Okay, so this is bullish engulfing candlestick pattern. Just let me give you a short introduction what this candlestick pattern is. So it clearly means that the close of the previous red candle, okay, should be engulfed by the opening of the next green candle, and the opening of the previous red candle should be engulfed by the close of the next green candle. Okay, so in short, the body of the previous candle, which is a bearish candle, should completely come inside the body of the next green candle. Okay, the bearish candle should be inside the come under the body of the bullish candle, okay, which should be the next candle. And after this pattern is formed, we have to add some additional confirmation which will tell us if the trend has actually changed or not. Okay, so how we can do that? First of all, take these two candles as one candle. Okay, first of all, draw the high of both the candles, okay, and the low of both the candles. Okay, sometimes the wick of this candle comes below the wick of the next green candle. In that case, this will be the low. Okay, but here it is not coming below the wick of this green candle. That's why we will have the will take the wick of the green candle only. Okay, so rule number one: in order for a trend to be valid for a breakout in upward direction, the previous trend should be either sideways or a downtrend. Okay, if you are getting confused, let me just simplify it. In order for this candlestick to start an uptrend, the previous trend should either be sideways like this. Okay, then this candlestick appears, and then there is a possibility that it will break out. Okay, it should be either coming from sideways or coming from downside. Okay, so number one is the previous trend should be sideways or a downtrend. It should never come from the upside. So if there is a continuous downtrend coming like this, the previous trend is coming from the upward direction, and this candlestick pattern is formed, then the chances that it will start an uptrend is very less, and most probably it will fail. Okay, it will not happen. So what you can do to filter out a valid signal? First of all, as I said, draw one line at the high and low of both this candle. Sorry, this did not touch. Yes, high and low. So first criteria, you have to see where the trend is coming from sideways or from bottom. Okay, if it is coming from sideways or from bottom, then you should consider the next step. If it is coming directly like this, then you better be cautious and just watch. Do not make any entry. Okay, now what is the next step? So after this pattern is formed, the next candle should break the high line with a good size of body. Okay, it should not be a doji. Let me make it clear. Let's say this is the high, and the next candle formed is a doji here like this with very little to no body. Then the trend has a very high chance of not turning into an uptrend. It might go sideways and again continue the downtrend. Okay, so this is the valid factor. You want to see a candle like this. Okay, and in case there is a doji formed at the top after the line is broken, then watch what is the next candle doing. If it is another doji, then watch again, and it might just go a little bit down and then break the high, then break this high line with a big green candle. In that case also it is a valid valid factor to confirm that the uptrend has started. Okay, and let's say the trend is weak, I mean the previous trend is up, then again you see this bullish engulfing candlestick pattern, then there is a high chance that the next candle will be breaking the low of this pattern and continue its trend down. Okay, like this. So these are the two factors. Let me just make it short and simple. First is the previous trend. In order for a bullish engulfing candlestick pattern to start an uptrend, first of all it should be having the previous trend as either sideways or coming from downside. Okay, which means the uptrend should have already begun, then only this candlestick will boost the next trend in the upward direction. But if it is coming from upside, okay, then this trend will fail, this candlestick pattern will fail, right? Now let me show you with some live examples in the candles in the chart, then it will be clear. Okay, so this is the SGX Nifty chart, and let me first show you how you can add a tool which will automatically show you the bullish engulfing pattern. So first of all, go to technicals and type bullish engulfing. Okay, first just type engulfing. Okay, so you can see bearish bullish, select this bullish engulfing option and you will get this. Okay, it will show you like this BE in the chart. Okay, so let us first analyze this part. Okay, so as you can see, let me just close the side bar. Okay, so here the pattern is formed. These two candlesticks are the bullish engulfing pattern. So we will again draw a line here and the low line here. Okay, and we will wait for this this upper line to be broken with a big green candle, and you can see the next candles did not break, it went sideways. Okay, but it did not go below this low line. Okay, which means that the chance of uptrend is still there. And then if I extend it here, you will see that this trend line is finally broken and you can see the trend going upward direction. Okay, and here there are multiple bullish engulfing patterns. Okay, and if you analyze it in the same way, you will get the same result. Let's say you draw one line here, draw one line here, then you will see that the trend line was broken finally with this candle. After that it did go up. Okay, let's check another example. Let me show you an example where the bullish engulfing pattern failed. Okay, failed means it did not fulfill the rules, that's why the downtrend continued. Okay, so this is another example, and as you can see the high was not broken here because the previous trend was coming from the upside. Okay, which means a downtrend was already there, and you can see this lower line was broken by this big red candle and it went down. Okay, now let's spot another bullish engulfing pattern. Okay, here there are multiple. Okay, let's take the first one. So these are the two candles. So this is the high, this is the low, and we will wait for the pattern to be broken. And you can see the pattern is broken, although it did not go very far, it just stopped here and went down because the trend was already weak. Okay, so that's why it is pretty important to see where the trend is coming from, and you can see here that the trend is coming from upside only. That's why it did not go up, because the trend is weak, right? Now let's check another example. Okay, here you can see once again this is the bullish engulfing candlestick pattern, and let me draw lines. This is the high line, this is the low line. The high line was again broken with another candle. This one went up, this candlestick up to this point. So if you are doing short term trades, then you spot this candlestick pattern in daily time frame, then you can make a good amount of money with this trade in lower time frame. Okay, now let's go to some other other chart, let's go to crude oil. Okay, this is the daily time frame, and please remember that you will spot this pattern mostly on daily time frame. You can spot it in lower time frames like 30 minutes, 1 hour, 15 minutes, but those are not valid. Okay, and if they are valid, only after you spot them in the daily time frame. Okay, if you spot the trend in higher time frame and then do a reconfirmation in lower time frame, then that is okay. But let's say the trend is here going like this downwards, and somewhere here you spot a bullish engulfing pattern in lower time frames like 15 minutes, and it is obeying the rule also. The high is broken, but the major trend is in a downward direction. That's why it has a very high chance of immediately failing. Okay, so make sure to spot this trend only in daily time frame. Okay, now another one. This is crude oil, and you can clearly see these two candles forming a pattern. Let me draw the line. This is the high, and you can see the high has been broken nicely and it went up. Okay, let's try another one. Here there is an example of where it failed, because see, the high was broken, but it is only the wick, no body. Okay, so this is what I was telling. The high should be broken only with a big green candle with a good size of body, not with a wick. And you can see, but the lower line was broken with this red candle, and that's why it went down. Okay, now let's check some more examples. Let's check here. Okay, yeah, this is a very nice example. So you can see here, this is the candlestick pattern form. Here is the high, here is the low. Okay, and you can see, if I draw it like this, the high was broken, but the body size is small, but you can take entries here. Okay, because the trend is coming from sideways. Okay, and the small body is also fine, it should not be a doji, and you can see it went up. Then this high of the bullish engulfing pattern acted as a support and the price went up. Right, let's check some more examples. Okay, here there are two more nice examples. This is the two candlestick pattern formed. I'll draw a line, and you can see it was broken here and an easy trade here. Again here I'll draw the high and low line, and it was broken again, and you can see it acted as a support and went up. Right, now let's check another commodity, that is natural gas. I will also show you on some normal stocks also. Okay, let's check a failure one. You can see this is the bullish engulfing pattern, the body is engulfed. So I'll draw the line, and you can see the pattern has been broken in the downside and it went down. Because if you remember what was the first criteria I told, check where the trend is coming from, and you can clearly see the trend is coming from higher side, which means a downtrend was already there. That's why it went down. Again, if we check this one, this is the high, this is the low, and you can see the high was broken. It did go down, but it again went up, because this was trying to break the downtrend and go into uptrend, but it continued as a sideways instead. Okay, but if you are doing trading in short time frame, you could have taken advantage only of this one big green candle. Okay, now let's check some stocks. Let's check ITC. This is one of the very popular stocks. Okay, and you can see here there is one bullish engulfing pattern. Again, draw the line. See, the upper line is broken, but with a red candle, which is not fulfilling our criteria. It should break with a green candle with good size of body. So this clearly means that the trend is weak, and if you check the prior trend, it is coming from upside. So there is no chance. You should ignore such kind of setup. Okay, let's scroll a little bit and see. Okay, there is another good example, which is a recent one. Okay, again you draw the line, bullish engulfing. Yes, it has been broken with a good size of green candle, and you can see the size of uptrend. let's measure how much percentage is it went up after this. Okay, around 13% in just 15 days. So this is a big move. Okay, now let's check just one more stock. Let's check Reliance Industries. Okay, yes, there is one more setup here, and you can see how this tool is helping us. It is found in here, the trading view, the engulfing pattern. It is showing us clearly. You can just draw the lines and wait for the criteria to be fulfilled, and you can take your trades. And you can see it went up directly with a gap up, and a gap up clearly means that a strong uptrend, and it acted as a support, and again it went up. Okay, let's check some more. Yes, there is another one. You can see the red body is engulfed by the green one, but here the red candle's wick is on the lower side. So I will take the low as this one, as high as this one, and you can see the line is broken with a big green candle, and therefore it acted as a support and went up. Okay, so this is how you can use the bullish engulfing pattern to be to spot uptrends. If you want, let me just show you the pattern once again. Okay, so you have to draw lines like this from high and low, and wait for this line to be broken with a big green candle. Okay, this should be green. Okay, green, and the prior trend should be either sideways or coming from a previous uptrend. Okay, like this. It should not be coming from a top side. Okay, it should not be an ongoing downtrend, right? These are the criteria. So that's all for this video. I hope this this teaching was helpful to you, and please note down and watch this video again if you want a better confirmation on how this technique works. You make notes and you can practice it. Just go to tradingview.com and add that indicator bullish engulfing and try it on any chart you want, and see if this criteria even this criteria is getting fulfilled, the trend is changing or not. Okay, and do let me know in the comment section if it is working or not. So that's all for this video. I hope this was helpful. Please hit the like button and subscribe to Financial Impulse for more such informative videos. Thank you. I will meet you in the next one. Take care.